What's going on, guys? Welcome back to another episode of Hustle with JesseW, and in this video we're going to go over some of the safest, in my opinion, short setups that you could possibly trade. Check it out. All right, guys, so in this video here, we're going to go over a couple short setups that I think are extremely safe as long as you stick to the plan, right? And that when somebody says a setup is safe, it doesn't mean that it has a high likelihood of working out necessarily. I mean, typically speaking, the setups one trades should have a high likelihood. When one says, or at least me says safe, it's that the risk reward parameter is on par, right? So you're talking about risk rewards with different take profits. Those of you who know how I trade know I scale out of my trades more often than not. So that means that my first take profit, generally speaking, is either a 1-to-1 or a 1-to-2. All right. So I'm risking $1 to make $2 per share, for example. Or you could see the 1-to-1 right on the first take. The second take might be a 1-to-3, right? And then the last take could be anywhere from a 1-to-4 or a 1-to-6, just depending, right, on the play and if the play worked itself out. But the point is, right, for example, that you're risking $1 on the very first take profit to make $2 or $1, basically 1-to-1 or 1-to-2 on the very first take profit, with the follow-up second take profit generally always being a 1-to-3. All right, so that's what one means by safe. Right, is that the risk reward parameters are in one's favor, right? So that if you're wrong X amount of times, you still come out a winner on the winning trade. That's basically just risk reward 101. I guess it's a little free part of the lesson itself here. Now I'm going to show you a short setup and strategy that a lot of people use that is not safe at all, and jump into charts. But before we do me a quick favor, smash the like button for me, subscribe to the channel if you're new around here, check out the daytraderchatroom.com. I'm going to leave a link in the description section and comment section. You can come trade with us every single Monday for free. All right, so I'll leave that link down there for you. And if you're looking for a broker, check out Webull. You download the app, fund the account with $100, you get 2 free stocks. Let's go ahead and jump into the charts.
All right, guys, so here is an example of a chart of a stock that will blow up a short trader, okay? This is a type of stock that many short traders would try to short and either have no plan or no discipline, right? And they end up blowing up their accounts. Why? Well, this is a stock that's a very low float, okay? It's a very low float stock, and it made, I don't know why this is showing like double candle here, like that double rainbow joke. But anyways, it made a huge move on Thursday, the day before Good Friday. Okay. Now this stock had no news that I found on that day. And it gapped up, it gapped up from down here in $3 land all the way up here to over $4. And this stock went as high as $15.81 at the highs up here. Okay, now a short bias trader, especially a perma short, perma bear, will look at this chart and be like, nope, I'm going to short this thing right up here because this stock has no business being up here, and it's just going to fade like many of the other pump and dumpers that have happened. They're just going to fade back down here. That's what they'll say, and they'll jump in short on that pop right there and that rejection, because that is in fact a bearish signal. And they'll think they're going to ride it back down here. They might not take profit there, and then it'll pop a 10 above VWAP like this, and they'll be like, nah, that's going to be short-lived. I'm going to add to my short, and it won't break down. And then some shorts will start to cover, some longs will start to get involved in here, and it'll pop back up here. But the stubborn short, that person will not cover here. They might add to the position there. They might add to the position there, and they might add again there, thinking, all right, that's it. This is going to break down right here. We're going to ride it back down. We're going to make some big money. And then right here, they might even get even extra confident and re-add more to the position. This happens. This is how some shorts blow up accounts. The same way longs blow up accounts by ending up holding bags, okay? And then the stock does the unthinkable. Boom. right? It happens. It happens. You know, and sometimes they'll get lucky and they'll hold on to the position. They won't get margin called, and the stock will, you know, come back down. But even this, it's still up a ton. So you don't know where this is going to reopen at. All right, so that's in my opinion, one of the wrong ways or the riskier ways of trading a short trade, right? A short play here, a short setup. Because if you never stopped out and just kept adding infinite because you are fully convinced it's going to fade the gap and come back down here to $3, well, you might end up getting hurt extremely violently, right? So when I short a stock, I don't like to short front side strength. This is all front side strength. I like to short the backside weakness of a stock. Now, I'm going to show you an example, and just one example, right? Because this summer I'm going to go into my shorting course at the daytraderchatroom.com, and I'll have many more examples there as well as many more detailed plans. So I'm just going to show you one example of what I consider a much safer setup for a short trade. All right, guys, so here is an example of a safer short setup. This is Tesla. Tesla had a nice run up the prior day and then gapped down the next day in the morning. Now, the next day in the morning, there were a couple of different setups one could have looked to have gotten short on this play, okay? For me, the safer setup on this was we opened up, we pushed on upward, and then we broke down underneath VWAP. The way I traded it, I believe on this day, was I took a starter position here when we broke underneath VWAP, okay? And the key for me was watching the volume profile. The volume profile on this drop had increasing volume. You see how the volume started to increase? This bar was bigger than this one. This bar was bigger than this one. So I took a starter in here, and when I had the first little bounce attempt here, it didn't quite make it up there to VWAP. I added because I took that as a rejection of that level, okay? And I added to my position on full size. And this was an actual short. It wasn't a put option play. You could have taken the same setup with put options. And I do have an options course at the daytraderchatroom.com. And the way I trade options is by using the actual stocks chart itself. Now, right in here, I added to full size. And my very first take profit was on this very first push through the low of day here. Now this stock here, what my stop would have been had the stock itself broken up and over this 416 whereas VWAP and the 9 AMA is at, right? Had we, you know, a starter here, add here, had this next candle just punched right through here, all right, and the volume was strong and it held the area, I would have stopped out. I would have cut that loss right there, taken my little L and moved on to the next trade. So it's a very, very tight, you know, risk reward that we got going on here. Why? Well, because I'm short from this drop underneath VWAP with a starter, so around 416. I add right around here, let's call it 415.50, 415.75. Okay, so I'm risking, let's say, $1.50, $2 a share, right, for the shot at making a minimum on my very first take profit, $3 a share, or just about $3 a share, right? Because my first take profit is just underneath this 413, and I'm short from 416, right? Let's call it an averaged out of 415.80s with my ad. My very first take profit, I'm not taking everything off, my very first take profit right here, I'm risking about $1.50 to make $3 a share on that very first take profit. With follow through, right? I took more profit through that 412. As soon as I make a new low of day, I'm taking more profit off. I'm adding more profit there with very minimal risk. Now there I could easily let this 9 AMA cross over VWAP and then use that 9 AMA as a trend line, and my new stop now, instead of being 416, will become that 9 AMA as we cross on underneath VWAP. Now another thing to note on these stocks when you want to watch for shorts that are somewhat safer than shorting front side strength is looking at the daily. Here you have SPCE. This is what's known as a blow off top. You could have taken short on this for a potential swing trade, or puts, for a potential swing trade, using the close as your stop. This is a blow off top. This stock just been up, going up and up and up and up until boom, full on exhaustion, rejection of the highs, humongous volume on that rejection. You can look for this thing to maybe drift its way back down to 20 bucks and maybe get yourself in there on a little bit of a swing trade, but always sticking to a plan. You must always have some sort of exit strategy if you're wrong, just like take profit zones when you're right. That's how you safely short a stock. You don't jump in front of that front side strength with no plan. And that's a very dangerous way of trading short. Some people are extremely successful at it. I prefer to short the backside weakness.
All right, guys. Well, I hope you enjoyed the video, and I took a good lesson from it here on what some risky setups look like and what some safer setups look like, and you're able to gather some knowledge from that. Let me know your thoughts. Drop them in the comment section below for me. Remember to smash the like button, subscribe to the channel if you haven't, and if you have any ideas on a video you want me to make, drop that in the comment section for me as well, and I'll catch you on the next one.